Peter Eliades with you. This is Stock Market Cycles Update for Thursday, August 27th. Bring out the trumpets. Let's hear the fanfares. I mean, this is something that really should be recognized. Not because I'm any kind of mad genius. I'm not. But this software it's not perfection, but it tells you how the market works. And if we can make that one point, we can show that to you. We did free updates for almost a year on YouTube, trying to convince people of the magic of these updates, the way the market works. Not really magic, just the way the market works. Why are we so excited and uppity today? Well, look what happened today. This projection, which is a 48.4 to 55.3 offset, the equivalent in trading days of a 10-week offset, gave a projection back on May 26th, May 27th. It was confirmed by going above both of the offsets up to this level, 3502.80, and if you click on this, 3794.12. Now it's funny because I look back at the updates that we did around May 26th, May 27th, and for some strange reason, I can't explain to you why, they were like a point difference or 2 points at the most difference in the projections at that time. But and again, it's insignificant, but it was interesting. You might notice there was a difference too, so I wanted to point it out. But look at today. The high today, 3501.38. 3502.79, missed by just over a point on the S&P. If you had told people back here, like we did, that we were going up to here, it's crazy time. Find me someone else in late May that was giving these zones for the market to go to. I'm not saying no one else did it. Maybe 1 in 1,000 or maybe 10,000 of people that do technical work. No one dreamed at that time that right here, when we were just at the 3,000 level, with what was happening in the background. And by the way, I just out of curiosity, I took a look. I said, I wonder what the news was about on COVID back on May 27th. Well, here's the May 27th news. The numbers: more than 5.6 million cases have been reported worldwide, as well as at least 353,000 deaths. There were Brazil spikes for 2 days in a row. Brazil's new deaths surpassed those in the United States. It now has the second highest number of cases. And that was the news back then. Nothing encouraging at all. So you were crazy to think the market was going to get up here. In fact, I think I said at the time, I don't really think we're getting up there, but I never distrust my projections. We are doing this video for both our own subscribers who pay money for it, and I think I won't say they're happy to do it, but I hope they're satisfied that they're doing it. This is an update we're going to share with the YouTube audience, simply because we promised them we'd do one every week or two, and so we're doing this one that we're going to share commonly with our paying subscribers and a free YouTube update. And it's kind of a publicity thing, yeah. Some people say, well, you only do the YouTube so you can promote your software. Well, yeah, wouldn't you want to promote this software if it was yours? What are you, crazy? So, for those of you that are watching this free on YouTube, I can tell you that this is available to you on a daily basis. Short-term, intermediate-term, longer-term updates. Just go to stockmarketcycles.com/register. And you can get a 14-day free trial for the software if you have TradeStation, and for the software and the daily updates, 14-day free trial. If you like it enough, you can get it, okay? So that's my publicity for the day. I showed you this update. Finally, what we told you back when we were down here just 3 or 4 days ago, at this point, I really think we're going to go up and at least get inside the projection window. And it took like 3 or 4 days to do that. Here we are. Fabulous projection, fabulously successful. Now, what about it? Where do we go from here? Well, the only other thing I want to show you today is something that I think might be important, and I showed it to our paying subscribers the other day. And that is this line, okay? Let me raise up the lower part here so you can see the whole thing. Okay. This is a trend line. It has two different sets of anchors, okay? The first anchor, if we go all the way back, watch this. Here's the low in 2009, okay? This trend line begins exactly on that low. That low occurred. Now, remember, this is a closing price chart. This is not market extremes. This closing low occurred on March 9th of 2009. And what we did is, because it traced so closely another trend line we use, the second anchor we put on that was January 26th of 18, okay? So that's the black trend line. The red trend line that follows it almost perfectly begins with a high, the external high, on the S&P on a closing basis on July 3rd of 2014, okay? And that also uses, as a second anchor point, the January 26th of 18 high. What's so very interesting about the lines is that they converge, and you can barely tell the difference. In fact, you can't tell the difference here because they're both at exactly the same point. So at this point, coming up to the January 26th of 18, the red trend line is slightly below the black trend line. Once it gets up there, the red trend line takes over and starts going ever so slightly above the black trend line. But again, they're hand in hand through most of this market action, and they picked the exact high back in February of this year. Here it is. Look at that. How do you do better than that? So we had this incredible decline, the greatest percentage decline from an all-time high in such a short period of time in history. I went back and looked for 100 years. This kind of decline, percentage-wise, never happened before from an all-time high in this short a period of time. And now look where we are. This is incredible. So the reason I think that this could be a real good indicator is look how close it is right now. So I did some math today, and the nice thing about the TradeStation numbers is that if you click on the trend line, notice down at the bottom they tell you the begin date, July 3rd of 14, the begin price, that's the exact closing price on that day because we use that, and then the end date, 126.18, and the end price, 28.72.87. And so it then, look further down, it gives you a bar count. That's how many trading days between the two dates. And then the time span is the calendar days. For our purposes, that's not important. But the bar count is. So if you subtract one of the anchor points, the higher one from the lower one, and divide by the number of days, it tells you how many points per day the trend line is moving, what the slope of the trend line is, okay? So we're not going to go through all the math with you, but it's a relatively simple way of doing it if you have the patience. Well, I had the patience today, and I found out that the trend line that goes from March 9th of 2009 to January 26th of 2018 is 2,196.23 points. And how many days were there? Well, there were 2,238 trading days. You divide the number of points by the number of trading days, and you come up with 0.9813 points per trading day. I'm not going to give you the same calculation for the two other anchors, July 3rd of 14 to Jan 26th of 18, but I will tell you that the slope of that one was very, very similar. The first one was 0.9813, the second one was 0.9882. And the only thing that's important now is where are they? Well, today, I'm going to give you the numbers, and if you're curious, I want you to write down the points per day, because from this point on, you can figure out each day where both these trend lines are exactly to within a hundredth of a point. Okay, so today 35.11.72 is where the shorter trend line from July 3rd to January 26th is today. 35.11.72. And on that, for each trading day from here, you add 0.9813 points. So tomorrow, you'll add 98.13, the next day 98.13. So every day, you will know exactly where that trend line is. Okay, the other trend line is, I might have given you the wrong one. The 35.16.21 is, well, it doesn't make a difference which is which. Here's the way to follow the trend lines. 35.16.21 for 0.9882 points per trading day, okay? So that's one of them. 3516.21, that's today. Add 0.9882 each day after today, and you will know exactly where that trend line is. The other one was 35.11.72, and you add the 0.9813, okay? So those are those two trend lines. You can track them exactly. I kind of have a feeling that it's going to be tested. I don't think we come this close to it without testing it. And look how important it was. I mean, this point here has nothing to do with whether you use the March of 09 low and bring it up to January 26th of 18 or the July 3rd of 14 high as a first anchor and January 26th of 18 as a second anchor. They sit on top of each other at the levels I just gave you. And that's all you need to know. Do we have to go up to that level? No, we don't have to go up there. Nothing has to happen in the stock market. Please write that down and remember it. Nothing has to, underline the has to, happen in the stock market. I just think because we're this close, we're probably going to test those lines. Now, is it possible to test it and go through them? Anything is possible, yes. But I wouldn't bet on it once they come up here because, as you know, the projections have now been met, and this would just move the S&P a little bit further into the projection window. I hope you're excited by all this. As you can tell, I certainly am. Thanks so much for watching. The next update will not be until for our subscribers will not be until the weekend update, which will probably come out on Sunday at some point. Thanks a lot for watching.